Welcome to this special segment of our channel, MarketBeat's Market Preview, where we talk about the latest developments in the market that investors need to know. I have Don Miller with us today. He's the Senior Content Manager at MarketBeat. Don, how are you doing?
Always good. Glad to be here, and congratulations on the channel. I hear it's doing great.
Thank you. All right, let's jump into it. Investors, I hate to say it, but don't get too comfortable. Don, I'm keeping an eye on the S&P 500 and it's moving higher, but on relief. What's the caveat here?
You and everybody else is keeping an eye on the S&P 500, Lacey. It seemingly can't get out of its own way, and that's typical for this kind of a market. 4,100 or 4,150 to me looks like the ceiling, the resistance level. You can't seem to get past that and maintain. It's proven that over and over the past 6 or 7 months. The news is so mixed, establishing a trend for the S&P in either direction. The market wants the Fed to stop raising rates. The Fed says no at this point, and so here we are. The market's going to kind of move sideways until we get that direction from the Fed, and I think that's what everybody's working for.
Let's talk about the CPI report for just a minute. It drove the first wave of relief, but only at headline level. So what's the most significant risk in the data?
The most significant risk is for people to pay attention to the headline CPI number. That's the significant risk. That's the one that always gets to play. That's the one that's always in the news. But the truth and the reality of it is that number comes out on CPI day this past week. It was Wednesday. The market got excited for, I think, about 2 hours, and then the euphoria dies down. Reality sets in, and the market at least seemingly says, no, we're not really ready to rally yet. And that's where we are with that. There's still a significant inflationary pressure on the economy. Good news quickly turns to bad news. The market goes sideways, and that's kind of where we are again, right? Going sideways.
All right, so you and I both know that it's not just inflation that we have to worry about. The outlook for GDP caught my attention, to say the least. Can you break that down for us quick?
I don't know about quick because I don't do anything quick. However, I will tell you this. Again, inflation is going to tie back into this answer that I'm going to give you. And when you hear it, you're going to understand what I'm saying. The GDP now, Fed's GDP now tool expects about 2% growth for the first quarter of 2023. But the broad consensus for the year is about 0.5%. That means you're looking at least 1 quarter of negative GPT and perhaps more. Perhaps more means a recession. And frankly, that means inflation is probably reaccelerated. We're going to get to that in just a minute. But it doesn't look good for the rest of the year at this point. Again, the entire world, and I mean the entire world, is waiting on what the Fed's going to do. So that's where we are there with the CPI. But again, don't pay attention to the headline number so much. Look behind the scenes a little bit. Look into the internals and see where the inflation's really coming from.
All right, Don, at peak earnings, they're rolling on. The big banks reported earnings on Friday. And I think the takeaway from that is that core business is still solid. Consumer spending is still good. But unfortunately, the outlook is still a little gloomy. Do you have anything to add to that? Are you looking ahead to any specific earnings reports that are due in the coming week?
Sure. Big banks' earnings started Friday, like you said, and most of them were good, if not great. The market didn't seem to care. The market still kind of went down on Friday. Banks make money in any environment, but they surely make a lot more when interest rates are high. But as far as earnings go, this coming week at MarketBeat, we'll be covering a lot of earnings. Obviously, it's earnings season. We'll be knee deep into it. Netflix reports, Abbott Laboratories, Tesla, Schlumberger, the Baker Hughes, D.R. Horton, Procter & Gamble, just a few that we'll catch early in the week. A couple of those are really, really important or widely followed stocks like Netflix and Tesla kind of set the tone for the market in the direction that we're going to go through the summer and into the fall.
All right. Do you have any final thoughts or even tips for investors when we're currently navigating this inflationary environment?
Well, let me give the disclaimer that everybody says I'm not a financial advisor, don't claim to be, and so this is not financial advice. However, We do talk to a lot of our subscribers on a daily basis, and the sense that I get from them is they're looking for safety for the most part. Everyone wants the same things when it comes to investing, Lacey. It's growth and gains. Not everyone uses the same tools or same vehicles to get there. Inflation is not new. It's going to continue. We've had it before. We'll get through this one, just like we have all the rest. But I think this is a great time for investors, especially the retail investors that MarketBeat caters to assess your risk tolerance and invest accordingly. The market's full of potholes and traps. For some, that means a bigger position in cash. For others, it means dividend stocks, and still others like to trade markets like this and scalp 5 to 10% gains. Everyone is different, but it's a great time, an absolutely perfect time to evaluate yourself and figure out who you are as an investor.
Right, that's a great note to end on, Don. I appreciate you joining me here for the market preview. We're going to see what unfolds this week, and we'll catch you back here next week for another market preview right here at the same time. Thanks for joining me, Don.
Thank you. I can't wait. Let's do it again.